So GST settlements can be payments where the business pays the government, the Australian Tax Office, but they can also be a refund of the GST clearing account. So it's still called a settlement. You're still settling the GST account. It's just a refund. What does that mean? Well, that means the GST clearing account can have a balance that is actually an asset. So usually it's a liability in most cases, but it can actually be an asset. So here we assume it's a liability, so it has the rules of debits and credits of a liability. However, let's just take the payments here. So when a business pays or gets charged GST by its suppliers, so we can see for rent, insurance, and inventory here, we've been charged 900, 107,000, and that's a total of 8,000. And when a liability goes down, that's a debit, so these would go on this side. However, the liability of GST clearing goes up when the business charges or collects GST. So we can see on our cash sales here, that was 4,000 and 3,000, and that would increase our liability. So that would be a credit. And what we can see here is that we've actually paid or been charged $8,000 of GST. That's more than the GST we've collected. So if I was to balance this ledger, this side is the bigger side, the debits. So that adds to 8,000. I'll write that there. I write it on the same line on the other side, and then I subtract away the numbers here. And if I subtract them away, I'm going to get $1,000 of a balance on the 31st of January, and I carry that down to the beginning of February. And what that means is I've carried that down. That is actually a debit balance. Now, liabilities can't have debit balances. That doesn't make sense. That'll be like a negative liability. So what we say is this GST clearing account changes from being a liability to actually being an asset. Okay, so in this case, it's an asset of $1,000 and it has a debit balance. And so what we say is in the balance sheet, normally GST clearing is probably going to be over here in current liabilities. It would actually pop up here. We would say there's a GST clearing current asset of $1,000. Why is this an asset? Well, an asset's got to have three things in part of the definition. The first thing is it's got to be a present economic resource or benefit. What does that mean? It means the ATO, the Australian Tax Office, will give the business back a refund of $1,000 cash, and we'll get it within 90 days. So that is why it's current. We don't need to know the 90 days, we just need to know that it's current. But in the real world, yeah, about every 90 days. Two, something that's an asset has to be controlled by the entity. What does that mean? It means only the business has a legal claim to this $1,000 cash. No other entity can control that amount. They can't take it, they can't spend it, they can't decide how to use it. Only our business can. So it is controlled by us. And thirdly, it's got to be a result of past events. What does that mean? It means that this asset occurred as a result of all the transactions that had GST during January. So that is a current asset. And the main takeaway there is to realize that we have an asset, and this asset's going to be settled by receiving money. And when we receive money from the ATO, we call that a GST refund. So we can see here, this account is now an asset. It's got a debit balance. All right. And what's going to happen is the government or the ATO is going to give our business $1,000. So let's say that happens on the 21st of February. The business received a GST refund settlement from the ATO of $1,000. What would happen here? Well, one thing that would happen is that an account called cash, which is an asset, would go up. The cash balance of our business, we're going to get cash, so we're going to have more of it, so it's going to increase. Now, when an asset increases, that's a debit. Now, we take this asset here. This asset is $1,000. The government owes us $1,000, but when they pay us back, okay, this GST clearing account, which is now an asset, when they pay us back, that account's actually going to decrease because they don't owe us $1,000 now. It's going to go down. So we say that's an asset going down. Now, when an asset decreases, that's a credit. So let's just check that balances in the accounting equation here. So first thing is I've got one asset going up for $1,000 called cash. And then I've got GST clearing, which in this case is an asset as well. Not always, but in this case it is. That's going down 1,000. And what's happened here is one asset's gone up by 1,000 and one asset's gone down by 1,000. So that equals 0. Liabilities were 0 and owner's equity was 0. So that actually balances. It's not like nothing's happened. You look at the zeros and you go, nothing happened. No, at least two things have to always happen. That's called double entry accounting. And in this case, the two things just happen to balance to 0. And that's okay. That's still a transaction and 0 is still a number. All right, so what would that look like now in our ledgers? Well, we're going to need a GST clearing account, which is an asset in this case, and a cash account. So let's take the first entry. We're going to go to cash on the 21st of February and do a debit of $1,000 here. So we can see 1,000, 21st of Feb. Then we're going to go to GST clearing and do a credit on the 21st here. I'm leaving the references till last. You can do them in whatever order. But the reason I do that is because I can now go, well, hang on, here's my debit here of 1,000. where will I find the credit to this? It's in an account here called GST clearing. So I'm going to put that there. There's my reference. And in the GST clearing account, there's my credit. It's a credit of 1,000. Where will I find the debit? It's here. And that is in an account called cash. And the main thing to realize here is that now this asset, which was 1,000 on the 1st of February, has now been cleared out and reset to zero, because that would actually balance to zero. So what we say is the GST account has been cleared out, and that is why we call it GST clearing. So this is similar to when the business receives cash from an account receivable. So here's what we just did. We received a GST settlement from the ATO. So what we had is we had a GST clearing account, which was an asset, and it had a debit balance here. Then sometimes we receive cash from an account receivable. That's someone that owes us money because we made a credit sale to them. So let's say we had the same thing. It's $1,000, and it would also be a debit balance here. The account would just be called accounts receivable. And what would happen is the business would get $1,000 in both cases. So in this case, with the GST settlement from the government, it was a debit of 1,000 to cash because we got money. And likewise here, when an account receivable pays us money, we'll have more money. So that would be a debit to cash too. And what would happen is the asset in this case would go down. So in this case, GST clearing was an asset of 1,000, but when it's paid back to us, it goes down by 1,000. So that would be a credit. When an account receivable pays us $1,000, well, they don't owe us 1,000 anymore. It goes down. So that would be a credit too. So when you look at it, it's basically the identical transaction. We get money, so cash goes up on the debit side. The credit is just going to a different asset, but it's an asset in both cases. It's either GST clearing or accounts receivable. Just a couple of little things to note with this before we can sort of move on and go, well, sometimes the GST settlement isn't as simple as we just made it seem. So we just had a debit balance here of 1,000, and we said they paid us back, and we just plopped a credit there. But sometimes this settlement refund actually happens after other transactions have occurred during the period. So maybe there's a whole bunch of other transactions in there, and by the time the 21st of February comes around, it's still a credit for $1,000. It's just sort of buried here amongst detail, but that's okay. It's still the same thing, okay? And that's what would actually happen in the real world. There'd be a bunch of other transactions, but you can still see the opening balance was 1,000, and then we settled it here. We got the money for 1,000 too. So just look out for that. And the last thing to look out for is that sometimes the GST settlement refund may only be a part settlement. So the government owes us 1,000. A whole bunch of other transactions occur during February, so it can be confusing to see what happened. And then on the 21st, maybe the government only refunds us $700. They'll refund it in two parts, and we'll get the other $300 later on. But the point is, this credit here, it matches up to that. It's got a different amount because it's only a part settlement, but that's entirely possible too. So just look out for something called a part settlement of a GST refund.